Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, Minneapolis wheat, and London UK feed wheat. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Paris milling wheat. Much like Chicago and Kansas City wheat, one single pattern has been the cause of the rising prices seen here throughout July. A pattern I highlighted a few weeks ago, a bright blue mid-May to early July base diamond bottom pattern. The move up easily reached its primary and harder to reach secondary topside targets. A week after we closed outside this pattern, we had a strong gapping move higher through the green short medium moving average, currently 219.25, and the 50% Fibonacci lines of the important 50% absolute Fibonacci line at 218.75, and the March to May 2024 move at 230.25. The market started slowing after pushing through the combination of the previously drawn bright red upper tine, currently at 246.25, and the purple neckline extension, currently 244 even, of the June to November 2023 head and shoulders top. The market breached these, but today turned low with an unusual and very large combined bearish long engulfing pattern. Wasn't today actually, it was last Friday. The move lower pierced through the 50% Fibonacci line at 230.5, but stopped short until today above the bright red middle tine, currently at 231 even. Today we punched down through this, and as I said last week about supports below, and I'm afraid it is a long piece, and I quote, "The first levels I would look to see some support forming, though I'd also keep an eye on the 50% Fibonacci line at 227.25 of the new recent late June to July 26 move, and an especially close eye on the gap left behind between 223.25 to 224.5. Now I have one more thing to say, and it's to deal with this rise as what is called a vertical run-up pattern. In such a move as we have seen, about 2 out of 10 times we see a further continuation higher, though not as swiftly. Most of the time, 8 out of 10 times, we see a retracement of some or all of the run-up. A rough median is about half the move up is retraced, with about 2 out of 10 times seeing a full retracement. However, the retracement is usually short-lived. A rough guide is about a month or so. The only exceptions are those that have seen a further continuation move higher, where it becomes problematic. This is worth considering here in this situation, also in the other grain markets as well." End of quote. Well, these comments still stand, but I would like to add one further observation, and it concerns the market's actions over mid to end of July. You see, elsewhere in the grains, prices have formed sometimes a small, irregular head and shoulders top pattern. However, this pattern is not so clear here. Indeed, could be argued that it does not exist. So I will not be setting it up on my daily chart here. However, the obstacles on any moves further down are still fairly obvious. They are the July gap between 224.5 down to 223.25, the green short medium moving average, and then the combination right now of the rising mauve medium moving average, currently 215.75, and the bright red lower tine, which is currently 215.5. Minneapolis wheat. Much like Chicago, Kansas City, and even Paris wheat, there is one single pattern that has been the cause of the rising prices seen here throughout July. A pattern I highlighted a few weeks ago. It is not a diamond pattern here. No. It is instead a mid-June to mid-July based V bottom. A pattern I highlighted in early July after a break higher from an earlier late May to early July bear channel. The resultant gapping move up from this bullish pattern pushed up through the mauve medium moving average, currently 671.25, the green short medium moving average, currently 673 even, the 50% Fibonacci lines of the May to August 24 move at 669.5, a number of highs and lows, notably the high seen back in May, which is in a congestion area between 723.75 to 737 even, Admittedly sparsely populated compared to what we have moved up through, but still a significant top at 735.5 and close to the June 21 low at 743 3/4 to finally slow down at the August 2017 high at 753.5 and before the congestion between 768 3/4 to 778 1/4, containing the July 21 high at 778 1/4. The recent actions allowed me 2 weeks ago to draw 2 new patterns, and I was not happy about doing so, as I would have preferred to have only drawn 1, but circumstances dictated back then I should draw the 2 in the hope they might show the bullish angle attack of this market. Well, they have, and we have left on my daily chart now just one, a bright red January to mid-June bullish Andrews pitchfork. The action late last week was that of a combined key reversal down and bearish below the stomach pattern. This week we have seen some stabilization at the congestion between 723 1/4 to 727 1/2. However, today we have punched down through this congestion, and we have a number of interesting supports below, which I detailed last week in a long piece, and I quote, notably between 701 1/4 to 708 even, as well as the bright red middle time, currently 701 1/2. Then the new 50% Fibonacci line, the late June to late July move at 681 3/4. Before we reach the July gap between 662.5 to 777 1/4. This is the really interesting one below, as it not only contains right now the green short medium moving average and the mauve medium moving average, but also the earlier mentioned 50% Fibonacci line, and should be cumbersome to deal with if we do get down that far. Now I have one more thing to say to deal with this rise and what is called a vertical run-up pattern. Such a move as we have seen about 2 out of 10 times, we see a further continuation higher, though not as swiftly. Most of the time, 8 out of 10 times, we see a retracement of some or all of the run up. A rough medium is about half the move up is retraced, with about 2 out of 10 times seeing a full retracement. However, the retracement is usually short-lived. A rough guide is about a month or so. The only exception is those that have seen a further continuation move higher, where it becomes problematic. This is worth considering here in this situation, also in the other grain markets as well. And that's the end of the long quote. These comments still stand, but I would like to add one further observation, and it concerns the market's actions over mid to the end of July. You see, elsewhere in the grains, prices have formed sometimes a small, irregular head and shoulders top pattern. However, this pattern is not so clear here, and indeed, it could be argued it does not exist here. So I will be not setting it up or any targets or even potentials on my daily chart here for that. London UK feed wheat. As I've repeated here for months and months, there are 2 key long-term patterns here to bear in mind for a common neckline extension, currently at 169.45. I've detailed these patterns in the past, but we are now sufficiently far away from the common neckline that I'll now suspend extensive discussion of these for now, or at least until prices start coming back down there again, should they do so. In a more recent action, much like Chicago, Kansas City, Minneapolis, and even Paris wheat, there's one single pattern that has been the cause of the recent rises here seen throughout July. A pattern I highlighted a few weeks ago. It is not a diamond pattern here, no. It is instead a small double bottom, formed over June and early July, which still managed to keep within the core pattern here, which is a really good core pattern, as I will demonstrate on this daily chart, and that is the purple end of June to late October 2025 bullish shift pitchfork, with prices racing up to be halted by a horn top last week, the second horn made at the end of last week being a somewhat unusual and dramatic long key reversal down, as well as an unusual dramatic bearish engulfing pattern, but it was capped by the purple upper tine of this pattern, currently at 209.55. The recent action saw a gapping move up with change over the rising mauve medium moving average, currently 181.15. The significant 50% absolute Fibonacci line at 180.5. The green short medium moving average, currently 183.60, as well as a number of middle tines and a bright red head and shoulders neckline for the March to May 2022 head and shoulders top, currently 192.85, with prices peaking just over the 2022 low at 206.5. This leads me to my final point. I drew 2 weeks ago and they have a common thread. They are patterns based on the same period that I drew last week. A bright pink late December 25 to late June bullish Andrews pitchfork. The bright pink upper tine, currently 211.65, I have no doubt assisted the purple upper tine in capping prices last week. Both of these things, the bright pink and the purple upper tines, are very satisfying to me. Last week, the big key reversal down come bearish engulfing pattern down finished closing just above the August 2021 high at 199.20. This was the first support underneath the market, and we have been testing and processing this all week until today, when we gapped lower below it. Only by a little bit, but we gapped below the August 21 high. This was the result of a midweek pipe top pattern last week. This gapping move lower was not by much, but it could be the start of a further decline, much as we have seen in the other international grain markets. So, what do we have in the way below? Well, we still have the congestion of the bright red neckline and the pink middle tine, currently 194.15. Then there is a 50% Fibonacci line, the very recent June to July 26 move at 189.10. However, I think better support exists below the first gap, between 188.75 to 189.75, where the purple middle tine, currently 188 even, crosses over the bright green April to May small head and shoulders neckline. And that's currently at 187.65. If prices drop below that, well, then it becomes very interesting. Now, I would like to repeat something which I said last week, as I think it's still very valid, and I quote, it's a long quote, I'm afraid. It is to deal with this rise as to what is called a vertical run-up pattern. In such a move as we have seen, about 2 out of 10 times we see a further continuation higher, though not as swiftly. Most of the time, 8 out of 10 times, we see a retracement of some or all of the run-up. A rough medium is about half the move up is retraced, with about 2 out of 10 times seeing a full retracement. However, the retracement is usually short-lived. A rough guide is about a month or so. The only exception to is those that have seen a further continuation move higher, where it becomes problematic. This is worth considering here in this situation, and also in the other grain markets as well, and that's the end of the quote. These comments still stand, but I would like to add one further observation, and it concerns the market's actions over mid to the end of July. You see, elsewhere in the grains, prices have formed sometimes a small, irregular head and shoulders pattern. Here, it is a very, very irregular and unclear pattern. But if you regard last week's actions of a horn top as the head, and this week's actions of a pipe top as the right shoulder, as you look at the pattern, then perhaps you can see it. What is interesting is that today's low and close is right on the dark blue neckline, currently at 196.20. And is right on, and that's on the right on the dark blue neckline for this small irregular head and shoulders top pattern. So far we have not broken the neckline, but I cannot in truth lay out any targets below as yet. However, just in case a break lower should happen before I next speak, here are some potentials for such a move down from the head and shoulders top pattern. Thus, a primary potential will be minus £6.90 under a confirmed break of the dark blue neckline, and a secondary harder to reach potential will be minus £13.50 under a confirmed break of the dark blue neckline. I now wait and see if this head and shoulders top becomes a reality. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.